Hi guys, it's Ryan from leprivatebanker.com. Just going to do a quick recap for the week on crude oil and gold. Just touching base on crude oil first. I'm just going to run through starting with the highest time frame. So looking at the weekly bars, just going to look what happened last week. We see this breakout, we see the destination trade from one side of the bracket to the other, and we had a pretty strong bullish close above the 103.76, which was a back adjusted yearly high for this year 2014. And coming into this week, I mean, we just couldn't trade above the 104.50, and if you remember last week I did point out that we see a huge passive seller into the 104.50s, and with about 850 contracts getting filled as a resting sell order, and the market has not been able to trade above this since. So moving forward, this is a real line in the sand, and we should see 104.50s revisited, but who knows where we'll go from here. But we are continuing to see one time framing up on the weekly, and we did close back inside the bracket. So obviously if we continue to break down here, then the destination will be back to the sort of 99.50s area, which would be the low of this bracketing area. That will have to break out the one time framing for this to happen. So just going through the time frames from the highest to lowest on the Vwaps. We'll start off with the yearly, and as you can see here, this year we've seen an inside year, we've seen rotations to the buyer side. We keep testing above the previous year's value, and we found sellers to the mean, sellers back to the mean, and with higher lows being put in, so an uptrend is starting to form here. I mean, we have seen one time frame on the monthly since the beginning of the year, so there's still the one time framing pattern is still working out on the month. Obviously we have a new month in play now, going into June, so it'd be interesting to see if we continue the one time framing on the monthly, and we will, if we do, then we will most likely see a new year high put in. So as you can see here, we've traded up, we put a new year high in, and we're starting to see balancing happen at this high, and value is starting to catch up with price here. So first of all, we started to reference the 1.5 standard deviation, but sellers have pushed it back down now to the previous year's high, testing this breakout level, and value is catching up with price here, so it'll be interesting to see how we continue to play out. Looking at the quarterly, we've still got one more month left of this quarter, so still got some time to put in higher value here, but I mean, we still are having overlapping value from last quarter. We did see just rotations to the so it's two-way trade still. I mean, we have started seeing imbalance occur on the quarterly, but obviously we have to continue to push the value higher, and obviously value will be created higher for this quarter. So depending on what happens next month, if we have another bullish month next month, then we will establish a higher value for this quarter. Obviously we've still got another month left, and who knows what's going to happen, so we'll just see what happens here. But at the minute we are starting to find buyers into the value area high for this quarter. Again, we did start to reference the 1.5 standard deviation, but this just got basically taken out, and we came and referenced the first standard deviation with buyers starting to step in here. So again, we could see a mean reversion, we could see the other side of value tested, which again lines up with this 99.5 if we continue to break down off these highs. Looking at the monthly, I mean, this month we see quite a nice imbalance to the buy side. We see a perfect destination trade work out from last month's value, so we came in, started to reference the value area low, and we see a rotation all the way to the value area high of a perfect destination trade. Value then pushed price higher, and we see this breakout into new year highs, back adjusted above the 102.50s, and we see this nice bullish rally. The market got capped at 104.50s, and since then the market come down, started to reference the 1.5 standard deviation, but since then has been pushed back down to the value. We see the first buyer stepping in off the value area highs for the month, and we see the second rotation down, testing the breakout higher. So this is some real important confidence here going into this 102.50s, and we did start to find buyers here on Friday, but we didn't really see an aggressive punch up. 104.10s should be revisited here. We are starting to hold this low excess, low volume node here, so Again, the line in the sand at the minute is the 102, the 104.50s, and 102 40s as well. So I mean, this low is going to be important for pushing into next week. New month now, so depending on obviously how we open up, if we're going to continue to push higher, then we want to see an open and a push straight outside of value going into Sunday and Monday's trade. If not, if we start to hang around too long in value, then we're most likely going to come back down and test the previous VWAP mean prices. Going into the weekly, we can see we've had 2 weeks of higher value now. So since we did break out, we established higher value from 102.30s up to 104.10s. This week we've had an inside week from last week, but we are holding higher values. So higher value got created 102.90 and 103.90. So the market is showing we are holding higher value. The market is showing that these higher prices are attracting attention here. So obviously pushing forward into next week, we've got important references here, and depending on how we play out, the first thing we want to see is almost a destination trade to the other side of value. If we continue to push down and find sellers here, then obviously we're most likely going to break down to the 99.50s. Just one thing to note this week though is we started off rotational imbalance. The market couldn't find offer above that previous value and taken out the 104.50s, so the next thing it did was come down, tested the mean prices for the week, and just started to see two-way rotational trade in the market. Just looking at the daily time frame now, I mean, we can see here that we came down and we tested and we closed this open gap. So this was the breakout level, and first of all we found support here at the gap higher, and then this was the original gap. Hold on, let me just sort this out. It's kind of a mess. So this was the first original gap after the breakout, and we did find support here on this liquidation on this day, and the market continued to reference this afterwards. But on Friday we did come down and we closed the open gap, finding support at this previous breakout level. So this is an important reference, as I said. This 102.50 is a very important reference, and just going to quickly show you this. I mean, on my 240-minute sort of candlesticks, I plot balancing areas and support and resistance and breakout levels with where stops will be in the market, and you can clearly see here that this was the previous area that we were in before we broke out, and the markets came back and tested this area now, and we found buyers here. So sort of the 102.70s up to the 103.70s is going to be very important playing into next week. Obviously a break above this sort of 104 area is most likely going to put in a new high, and if we continue to break back down into this previous range, then we're most likely going to see the 101s referenced. We'll see what happens here. This is just my my video charts, so I don't have all updated stuff on here. These are not my work template, my trading templates. So anyway, moving forward here, I'm just going to run through quickly run through the distributions that we see playing into next week, into last week. So first of all, we had the breakout. We had the previous sort of 4 or 5 day balance down here before we see the breakout. This was the breakout we referenced, and we found bid here into a new year high, and you can clearly see we started to establish value from 103.70s up to 104.20s with a mean price of the 104 evens. So coming in on Wednesday, we opened up below the point of control. I mean, if we opened up above, then I was looking to be a buyer. If we opened up below, the market was telling me that something was changing, and two-way trade and balance was starting to come back into the market. So what we see here was a long liquidation profile. So off of the open, they came in, sold the market inside of value, and the market could not then trade back inside the initial balance and back inside this value area. So what we see is we see selling all day, as they were clearing out some inventory from the books, and then into the last period we see this big spike. I mean, with short covering and long liquidation, when we see the BNP profiles, I mean, we do normally see the spike as the market is showing an imbalance to one side and some covering come into the market, and obviously there was so much to do that we see this massive spike down. cleaning up this poor low that we see, and also referencing almost the gap high. Not closing out the gap completely, but there was some excess here. So now you can see that the value is still established from 1350s up to 104.20s with a still mean price of 104 even. So coming into the next day, we have two options. We either completely disrespect this selling spike, and we open gap down, we open in a spike and find selling off the open, and we see a disconnection away from this value area and price, and we see a change in equilibrium, or we see reversion to the mean sort of play out. So I mean, the market came in, there's nothing to do off the open, buyers came in, punched it above the initial balance, and I do believe we closed out higher. We then came down for a retest. We see buyers absorbing below the initial balance and holding this excess spike level, and we see reversion back to value into the mean. So this was just a clear scenario. Your entry should have been within the initial balance or below it, with a stop below this spike down, and obviously a target into the point of control. Coming into Friday's trade, I mean, we had a very imbalance to the sell side. We were still holding below the developing value for the week, and we were coming back into the monthly value area. So we opened up here at 102.91s, and as you can see, we did open up back inside the monthly developing value. I mean, what I wanted to see was continued rejection to the buy side to start leaning off the long, but as we were trying to come back into value here, it made things quite difficult. Friday was actually quite a hard trading day. There's a lot of conflicting information, and there was no clear direction. I mean, the only thing that really, I suppose, made sense was the fact that we came down and tested that breakout low at the 102.50s and that previous value area high for last month. I was actually short. I came in, I got short the market, and because what we see was an imbalance to the sell side. The market was open below value, and there was an imbalance on the Globex Vwap. So off the open at 9 o'clock, we see just we see a vacuum back up to the mean price and the previous value area, and an initial balance high that came in, and I got short at 103 even, with a stop obviously above Vwap and inside this previous value area, as I wanted to see a rejection. So this worked out nicely, and we see sellers came in. We started to see rotations at the value area low, and we finally see this spike down. I actually had a target just low of the weekly value area into this 102.32s that I didn't get filled. I suppose I should have had it at this my target at the third IB extension maybe, but maybe I was getting a little bit greedy here. But we see a punch below the previous Globex lows, and I was expecting a bit of a breakout, and like I said, a test of the weekly value area low from last week. But we just found aggressive offer here from that previous breakout high, which was the 102.50s, and the value area high for last month. So I ended up basically just getting my stop filled inside the initial balance. I mean, I was maybe expecting a pullback and another rotation down, but we just see offer coming very strong here, and we see a reversion straight back to the mean price here. So I mean, I still got some good scaled outs into this breakout, but my core position, I ended up getting stopped back out inside the initial balance, just trying to keep it logical. I mean, obviously from hindsight, maybe I should have just got out as we broke into the broke back into the 1.5, the value, sorry, the first standard deviation, and a break back into the previous day's range. But regards RTH, we were still showing an outside day on the pit session, so I was still expecting maybe some downwards rotations in this market, which just didn't happen. So pushing into next week, obviously we have this key support level now in this key area. So obviously important levels are going to be this 102.50s, and obviously the current year high is at 102.50s, so 104.50s. So depending on how we open, how we see the next week play out, depending obviously if we see more two-way trade balance coming in at these highs, or if we see a breakdown or we see a breakout to the buy side. I'm just going to quickly touch base on gold here very quickly. I mean, gold, we just see a pretty big sell-off. We saw this coiling effect coming into the market. We see this very tight consolidation, and finally we broke out this wedge, and we're coming to reference this 104, this 1240 area, as I said last week. This is the current composite that I was tracking, and as you can see, we just the market broke out away from this previous range it was in, and we're now trading back into this distribution. So I said the 1240s was the next area to test, and we did this beautifully this week. So as you can see, the market just started to grind down, and on Friday we see this perfect test of this high volume node of this 1240s. So obviously the next destination is 1226s, and then this low volume node at 1217s, as we're referencing this this distribution now. And we could see some offer come back up into the 1270s and sellers back down. We'll just again have to see how this plays out, but as you can see, these levels are very clear levels of that the market's going to rotate to. So the 1257s and even the 1290s and the 1241s, 1240s are very visual levels that the market's going to reference. You can see last week was just a complete imbalance to the sell side. I mean, this week's value, last week's value just clearly showed that. We see selling straight off the open, and we completely cleared the value, and ever since then we just see a complete selling imbalance all week, creating lower value in this market. On the daily, just still you can see this this major price consolidation that we was in. We've finally seen a breakout here. So obviously next stop now that we're looking at, depending on if we see support come to the market, is a retest of the year lows at 1180s even. Anyway, I'm going to leave it at that. This video is starting to run quite long now, so if you have any questions, please ask me on the forum or email us. Check out the website. Take care, have a great weekend. Goodbye.